a.m. in New York City, 10 a.m. in London. Good morning, I'm Veronica Clark with your Bloomberg Brief. Let's get you set up for the day. The war rages on. Iran unleashes a salvo of missiles and drones across the Persian Gulf while Israel resumes strikes. Oil marching higher, crude on track for its biggest weekly surge since 2022 as the White House lays all options on the table to tame prices. And it is Jobs Day, with investors gauging whether the labour market will add to inflation concerns as gasoline prices hit their highest in 18 months. The 8th day of the war then, and let's look at these markets, particularly oil markets. We are looking at New York crude now that is almost at $85 a barrel, and you know it. That means that Brent crude is higher again, up past $87 a barrel. So taking out those levels that we were watching closely all week and then some. This probably means that futures are lower. The dollar index as well has reversed and it is now gaining on the session. It had given up some of those gains that we saw during the week earlier on in the session. But look at that 10-year yield. We are close to 4.17 now. Are we talking about nearly a 30 basis point move just this week? It is firmly risk off once again today. If anything, jitters right back on. And then in terms of the VIX index, look, we're closing in once again on 25. Gold is off its highs of the morning, but it's still higher by about 0.1%. And as I said, those futures are lower. Let's get to some individual movers now with Abir Abu Omar. Abir.
Good morning, Vani. I've got mixed themes for you this morning, starting with Marvel, advancing quite nicely in the pre-trade session this morning, 12% upward, as you see here. And that is on the back of the story that we've seen reverberate across the S&P this year, and that is strong demand for data centers. So what Marvel has said is that demand for its data centers had exceeded their expectation. First quarter revenue is also expected to come over analyst estimates. So this is a really good story for this semiconductor producer based in Santa Clara. But moving on, if we flip the board, we turn to another industry, and that is clothing. Gap is not doing as well this morning. It is retreating about 7% in the pre-trade this morning, and that is on the back of some disappointing results. Old Navy, that is the biggest brand in Gap, had missed some estimates. And this is perhaps also a story about some of those tariff shocks that we've seen. Some of the supply shocks that are happening right now across the Middle East may also have an impact going forward on that stock. And then finally, we move on to pharma, flipping the board to Zealand, that is already trading in Denmark this morning, and that is 31% down this morning in the intraday trade, Vani, and that is on the back of this weight loss drug with Roche that had disappointed Wall Street estimates. So it had caused weight loss of just above 10% in 42 weeks, coming shorter than Eli Lilly and Novo Nordisk. Those are rivals of Zealand and Roche. But Vani, back to you.
Abir, thank you so much. Abir Abu Omar will be back with us later in the hour. Also coming up this hour, we'll count you down to the payrolls report with Citi's Veronica Clark. But first, day 7 for the Iran war with more than 1,300 people dead and no end in sight.
Their Navy is gone. 24 ships in 3 days. That's a lot of ships. Their anti-aircraft weapons are gone, so they have no air force, they have no air defense. All of their airplanes are gone. Their communications are gone. Missiles are gone, launches are gone, about 60% and 64% respectively.
Our soldiers are prepared for any scenario. When I said that we are waiting for them, it didn't mean that we are waiting for continuation of the war. No, but we have prepared ourselves to confront with any scenario, with any eventuality, any possibility, and we know that we can handle that.
All right, let's get to our team coverage now with Jumana Bersachi in Dubai, Brendan Murray, who covers trade, and Bloomberg's EMEA News Director, Will Kennedy. Jumana, just bring us up to speed as we enter the U.S. morning. What's been happening in the last few hours?
Yep, day 7 of the Iran war, and things are not letting up. We actually heard from the Defense Secretary yesterday, Pete Hegseth, and he said that the firepower over Iran is about to surge dramatically. We also just heard President Trump there talking about some of the operational successes that they've had so far. His words saying that they've managed to neutralize about 60% of Iran's missile launchers and air defense system. He also said earlier this week that the U.S. now have complete control over the skies, and what we're hearing overnight is reports of several explosions throughout the capital and around other parts of Iran as well. Central Command saying that they've hit over 200 targets in the last 72 hours. And the other front that is also opened up is in Lebanon too. The IDF warning citizens of the south and in southern parts of Beirut to evacuate, and over 24 strikes have taken place over southern Beirut over the course of the evening as well. And that is in retaliation for rockets that Hezbollah fired into northern Israel earlier on in the week. Now, Iran remained defiant. They have still not formally announced who the successor is going to be to the supreme leader. President Trump saying in an NBC interview that he would like to see a complete overhaul of the leadership structure. And yet, Iran continues to retaliate, mostly against Gulf states. It was a quiet night over in Israel. Just in the last few minutes, it seems a barrage of missiles have once again been directed towards Israel. But again, this part of the world, the UAE, Qatar, Saudi Arabia, Kuwait, continue to intercept many of the incoming drones that had been coming through. Yesterday, once again, energy infrastructure hit. The Bahrain refinery was one of the targets. The drone there intercepted, causing limited damage. But I think all of this to say that as we are entering into day 7 of this war, there are no signs of things letting up on either side.
Well, let me come to you, Will Kennedy, because the Trump administration, Trump himself, put options on the table to try to bring down oil prices. But since then, the Treasury is now ruling out trading in oil futures, the effects of which were moot at best anyway, right? And it says it's also hesitant to tap the Strategic Petroleum Reserve. So what does that leave for the administration?
Well, it has done one significant thing in the last 24 hours, which is to provide a waiver that allows Indian oil refiners to buy Russian crude and without being sanctioned. And there was a lot of Russian crude loaded onto tankers looking for somewhere to go. And the Indians are now going to be able to buy that, put it in their refineries and replace oil that they would have got from the Persian Gulf region. So that is one sort of safety valve that they can use to take a bit of pressure out of the market. The SPR will remain on the table. The IEA, the International Energy Watchdog, which can coordinate a global release among its members of stockpiles, that's another possibility. But as the war keeps going on, the pressure inside the energy system is building, and we've seen prices continue to rise today. Gasoline prices in the US are now as high as they've been since Trump took office. That will start to become uncomfortable for him. And the Financial Times this morning published a very interesting interview with a Qatari energy minister in which he said that there are real dangers of prolonged energy shortages globally. And if this continues, oil could go as high as $150 a barrel. So the risks are building and will continue to build as long as the Strait of Hormuz remains all but closed to shipping.
He actually said that even if the war ended immediately, it would take Qatar weeks to months to return to a normal cycle of deliveries, which is pretty terrifying. Brendan Murray, let me come to you on the India deal, because this takes some Russian barrels, I guess, off the market, or at least off the dark market. Or how does this actually change the calculus for other countries? Yeah, like Will said, this is it's sort of a relief valve for the oil market. It's also interesting because it plays into the U.S.-India trade dynamic. They're trying to negotiate a trade deal. The President Trump had put pressure on the Indians with this extra tariff because of their Russian oil purchases. So it kind of clouds the outlook for that particular trade deal, which both sides had wanted to finish over the next several weeks. So it's definitely something that complicates the Trump administration's overall strategy with one of the biggest economies that it's trying to sync up with to diversify away from China. It complicates the relationships between the countries too, right? I mean, on the one hand, you have Russian barrels going to India. Modi was just back from Israel when they started striking. And Modi seems to be a little bit under pressure now to come up with some kind of response or to take sides, if you like, in this war. Will, let me ask you, I mean, does that change any calculus at all?
the international picture is just so complicated right now, and all of the things you say are parts of it. The other part here is that the move on Russian oil into India is a big win for Vladimir Putin. Putin had been under a lot of pressure. Oil prices were quite low. It was very hard for Russia to place its barrels. Russian oil was trading at a big discount to international benchmarks. All of a sudden, he can sell oil to India. Oil prices are rising again. It will be a huge relief in Moscow to their economic problems, to their budget pressures. And again, what's happening will not be of any comfort to Volodymyr Zelensky, who is seeing all the attention placed elsewhere and is seeing this economic boon to Russia.
And those peace negotiations just had to get postponed indefinitely, right? All right, our thanks to our panellists. Thank you to Will Kennedy just then, Brendan Murray, our trade czar, and Jumana Bersetchi in Dubai. Jumana spoke with Amos Hochstein, former White House top advisor in the Biden administration, earlier on the energy crisis. Let's have a listen.
People in the market think that this is like the 12-day war. This is like Venezuela. It'll be over soon. Or we can do some cosmetic changes like this waiver. But when you take out so much oil, such a massive volume of oil and natural gas and refined products and fertilizer off the market for such a lengthy period of time, if it keeps going for a few days, it's not about whether you can buy some Russian barrels off of ships, but rather, will there be shut-in of production in Saudi Arabia, in Kuwait, in Qatar, in UAE? Mm-hmm. And once you shut that in, it's very much harder to bring that back on than it is to shut it. And so I think if we go into this weekend with these prices, but on Sunday night when oil prices start trading again, if the straits are still closed, I think the spike will be much more significant.
So let me ask you this. If you do think the price is going to be a lot more significant, how influential is the price of oil going to be in determining the duration of this war?
Yeah, I think that's the million-dollar question. Right now, you have two forces that are fighting this war, Israel and the United States. It's very easy to be able to figure out what the national security rationale for this war is for Israel, and it's very popular in Israel. In the United States, Americans are still confused as to why we're in this war to begin with. Is this in the interest of the United States? So when you add to that confusion, and again, this confusion is with the fact that most people believe the Iranians are an evil regime that has enormous amount of blood on their hands of civilians, including many Americans. So no sympathy for Iran here. But understand between that and understanding why we're at war, and then you add a cost of energy prices, which goes to electricity and food and gasoline and a lot of other commodities throughout the economy. I think people say, am I willing to be able to pay for this? And there's going to have to be a way for the administration. It's going to have to explain and to demonstrate that it is either very temporary or that they'll be able to mitigate the cost for the American public. That is a very difficult thing to do in these kind of circumstances.
Yeah. How do you think the U.S. administration is going to define success in this instance?
Well, I think we have two options here. One is success by saying that the regime is gone, it has collapsed, and there is a new regime in place, which is difficult to do without troops on the ground. The other is to declare victory at some point and say unilaterally, look, we defeated their navy, sank all their ships, we destroyed their air force, the leadership has been decapitated, their missiles have been mitigated and destroyed, most of their launchers and missile capacity, the nuclear has been destroyed, and we are stopping this war now, and the Iranians need to change their behavior into the future, or else we will come back. So those are the two options here. Yeah. Either you change the regime or you leave it intact but weakened.
That was Amos Hochstein, former White House advisor in the Biden administration, speaking with Bloomberg's Jumana Bersetchi. Now to other top stories trending on the terminal this morning. Deutsche Lufthansa is considering adding flights to Asia and Africa due to growing demand for long-haul routes in the wake of the Iran war. The war has upended passenger flows that would have been served by Middle Eastern carriers. It's looking to add flights to Singapore, India, China and South Africa. Liberty Media Formula One has seen $1.9 billion wiped off its market value since the Iran war began. The new F1 season begins this weekend in Melbourne, Australia, the first of 24 races in 2026. Uncertainty surrounds 2 races next month in Bahrain and also Saudi Arabia. And Roche and Zealand Pharma shares plummeted after their experimental obesity shot failed to meet industry expectations in a study. The shot had mild side effects and resulted in 10.7% weight loss after 42 weeks of treatment. That's well short, though, of results for existing treatments from Eli Lilly and Novo Nordisk. Coming up, the U.S. considers permit requirements for AI chip sales abroad. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Veronica Clark in London. Chip stocks lower in the pre-market as the U.S. proposes a rule to require licenses for AI chip exports. For more, Matt Bloxham of Bloomberg Intelligence joins us now. I thought we were through this period. I mean, wasn't this the whole, NVIDIA chip licensing agreement and so on? The U.S. is now considering it again?
Yeah, I think strategically there's some relevant context there. Clearly, the U.S. wants to be in control of global AI strategy. Obviously, we're seeing them use AI quite extensively in the current Iran conflict. And I think it just is an acknowledgement that AI technology is expanding and improving so quickly that there's a lot more at risk in terms of how this technology spreads and gets into perhaps in kind of rivals' hands that they kind of want to be in control of. And given that there's so much of the AI technology that's being driven by US companies, I can see the sense in having some clearer oversight about that, how that technology spreads around the world.
Are we really mainly talking about NVIDIA and AMD here, or what other companies would be affected?
Potentially you could see the likes of Google, because they're obviously developing their own equivalent TPU chips, which so far they've only really considered for their own use, but they are looking now to kind of sell it to others. And obviously Meta's also developing its own AI accelerators, so there could be a lot of other companies that do kind of get drawn into this, both in terms of the direct kind of AI accelerator technology, but also the components that go into that.
Moving on to the Anthropic story, now Dario Amodei is saying he has no other choice but to basically sue the government because it's taking away a $200 billion contract because they won't let the government use their material.
Exactly, and I think there's a bigger story here is that obviously Anthropic is reported to be looking to do an IPO, almost kind of vying head-to-head with OpenAI. And even though this kind of contract isn't that big for them, I think the broader stigma, if you like, of being designated as a supply chain risk would potentially have quite negative consequences for how their IPO is perceived by some investors. So I think even if, getting that removed doesn't really directly impact either their financials or their abilities to do kind of business with the US government, I think that broader stigma could be a bigger concern for them.
But just to clarify, that label is on until there is a court case and something gets decided potentially by a judge?
Exactly,
wow.
Yeah.
SoftBank is looking for a loan now to invest again in OpenAI. What is this about and why does Masayoshi Son need the money?
Yeah, so they're obviously doubling down on their investment in OpenAI as one of the best ways, in their view, to play the AI story. They've already kind of invested $30 billion or so into the company and looking to kind of double that investment. They need to kind of raise money to fund that. One of the options is to do it through debt. Now, they do have a bunch of other investments. For example, their big stake in Arm. They've got a big chunk of stock in T-Mobile US, which they've got a plan to kind of sell down anyway. It's about $10 billion. So I think to some degree they may ultimately kind of refinance this investment through reshuffling their equity investment portfolio. But in the short term, they need the money to fund that. So yeah, up to $40 billion of debt to cover this $30 billion of investment in OpenAI.
Do we know what the return from Masayoshi-san is yet on AI? I mean, AI so far and his chip bets and AMD and so forth and ARM.
I don't have that number off the top of my head. I mean, I think you'd probably imagine that certainly the original investment in OpenAI, that first $8 billion, which got them to about a 10 or 11% stake, it's probably been pretty good as long as like the OpenAI IPO goes ahead and they get the big valuation that people are expecting.
The big exit. All right, Matt Bloxham, thank you so much. Matt Bloxham of Bloomberg Intelligence there. Coming up, the UAE explores freezing Iranian assets. More on that and what else is making headlines in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in London. Time now for your front page news. And first up, the Wall Street Journal leading with the UAE exploring freezing Iranian assets to punish Tehran for attacks. Any crackdown on Iran's shadow financing networks in the Gulf state would strangle Tehran's access to foreign currency and global trade. The Financial Times leading with Gulf states potentially reviewing overseas investments to ease strains caused by the Iran war. A Gulf official said it could have an impact on anything from investment pledges to foreign states, companies, sports sponsorships, contracts with businesses and investors. And finally, the New York Times on the U.S. restarting diplomatic relations with Venezuela. The State Department announcing the re-establishment of diplomatic and consular relations in a statement released Thursday evening. And those are your front page stories. Coming up, we're going to be talking jobs report because that's on everyone's radar today as well. We'll push ahead to that with Veronica Clark of Citi next. This is Bloomberg. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The war rages on. Iran unleashes a salvo of missiles and drones across the Persian Gulf, while Israel resumes strikes. Oil marching higher, crude on track for its biggest weekly surge since 2022, as the White House lays out all options on the table to tame prices. And it's jobs day, with investors gauging whether the labour market will add to inflation concerns as gasoline prices hit their highest in 18 months. So let's have a look at those markets then. WTI, look at that, up 3.5%. It's close to $84 a barrel. Brent crude is close to $87 a barrel, so it's taken out that $85 mark no problem today and is going ever higher. This after the Qatari energy minister basically gave a chilling interview with the Financial Times, saying that the war in the Middle East could literally, quote, bring down the economies of the world. He said within weeks it could drive oil to $150 a barrel. That is not having a good impact on sentiment today. Earlier, futures were higher, but they are very much turned lower now. The dollar index had also eased off, and it is higher again, as you can see. Gold higher again. The VIX trading above 24. For some stocks to watch now, let's get to Abir Abu Omar. Abir.
Good morning, Vonnie. So the S&P futures are down quite a bit, but there are some bright spots this morning, starting with Marvel. Now, this is a story that we've seen reflected in multiple earnings statements across the S&P so far this quarter, and that is demand for data centers. If you remember, NVIDIA's earnings a couple of weeks ago showed that that segment is doing quite well across NVIDIA's business. So Marvel said that demand for data centers has exceeded expectations, as well as demand for those AI chips. So the company is doing pretty well. Investors are adding 11.3% to the stock, so adding to those gains from earlier in the session this morning. We flip the board and we turn to a slightly different industry, or a very different industry. Gap, this clothing brand, is not doing as nicely this morning, retreating about 6% in the pre-trade in the U.S., Vonnie. And this is a mixture of things. This is missing estimates. Gross margins were impacted as well. And this is also a story that reflects the tariff shock by President Trump's Liberation Day back in April, possibly prone to some further weakness because of the supply shocks that we could likely see out of the Middle East going forward. And then finally, we turn to a stock that is already trading in Denmark this morning. Pharma, Zealand, not doing very well, down about 33%, and that is on the back of this weight loss drug that it has with Roche in Switzerland that has missed the estimates for Wall Street. So it has delivered a 10.7% weight loss across 42 weeks. That is much lower than rivals in Novo Nordisk and Eli Lilly. So investors are reflecting that in the stock that is retreating about 33% this morning in Europe. Vani, back to you.
Wow, a third of its value. Okay, Abir, thank you so much. That's Abir Abu Omar. A global bond rout deepening as the continued rally in oil prices stokes fear the Iran war will fuel inflation. That's, of course, as markets await the latest jobs report set for just under 3 hours' time. Joining us now is Veronica Clark, U.S. economist at Citi. So, Veronica, how much does the war muddy the waters around this jobs report, if at all?
Yeah, there's not going to be much direct impact, of course, from the market moves we've seen this week. This is February data that we're getting this morning. What it does probably mean is that markets take this number with a bit of a grain of salt, including even the inflation data that we're going to get next week for February. This is just going to maybe look a bit stale in retrospect, given what we've seen developing this week. And yeah, we'll just have to wait and see how that impacts inflation and jobs going forward.
So given that we've had, obviously, developments since this jobs data was collected, what were you anticipating when this was your sole focus?
Yeah. So this is the February read on unemployment. We're expecting to see 30,000 jobs. That's actually down a bit from where we were initially expecting to see this February number. There's actually going to be a larger than expected strike impacting this February data in the healthcare sector. That'll weigh on jobs by maybe 30,000 or so. Of course, those workers would then add to jobs once that strike ends. But adjusting for that strike effect, this is probably a pretty benign reading. We're expecting to see the unemployment rate tick a bit higher to 4.4%. That's where we were in December. This is probably nothing that's going to really shake any change for the Fed right now.
Now, if that's all we had to worry about, would the Fed be quite sanguine about where it stands and where the market stands, frankly, in terms of rate cuts this year? And I suppose the follow-on from that would be, if that's the case, then the change that we've seen in those expectations, is it about right for this war?
Yeah, I think, we already knew that the Fed was going to be on hold in the very near term. So developments this week, the move higher in oil prices, of course, doesn't really change that. I don't think this jobs data today will change that either. They're very likely on hold at the meeting we'll have in just a couple weeks. It does mean that they have some time to wait and see how things evolve. Of course, the macro impact of higher oil prices is going to depend a lot on how high they stay and how high for how long. At this point, though, it is certainly going to be a boost to headline inflation as we get into March. Gas prices alone, that can add something like 30, 40 basis points potentially to March headline CPI. The real question, though, is what kind of pass-through are we going to get from higher energy costs into core inflation, components that the Fed would maybe care a bit more about. Usually that pass-through is relatively small, but we have already seen other goods prices, input costs going up. So yeah, they are probably going to wait and see how this shakes out for the inflation data.
Yeah, as you say, I mean, there was a time when the Fed chair was tired of telling people not to look at energy prices, right? This was back when inflation and transitory were words that we used to use frequently. But this kind of persistent increase in oil, and we're seeing it again today with Brent crude at 87 and WTI, frankly, the spread there has really narrowed, Veronica. At what point do we need to worry that this is going to really pass through to the economy? You also point out that it's not just oil. Recently, it's been steel, aluminum, copper, all sorts of inputs.
Right. Yeah, that really complicates the picture because, usually we think of the pass-through of just higher oil prices into core inflation as usually relatively limited. You see, obviously higher transportation costs and things like that, but it takes a while for that to trickle down into consumer prices. Maybe for something like airfares, you see higher airfares, jet fuel costs. But we have experienced a couple months now where there is that stickiness to core, goods inflation. We see that in the PPI data, starting with tariffs, of course, in 2025. That's one cause of it. And if that continues, then you're maybe starting to think that maybe goods prices are stickier for even longer. I would say though that this is just a very different labor market than the last time we experienced a supply shock, driven goods inflation, of course, after the pandemic. And I wouldn't expect that you're seeing this filter into, too many services prices. This is just not a tight enough labor market, I think, to allow for that. But still, even stronger inflation for any reason is going to be a bit, worrisome for the Fed right now.
Veronica, what are the conversations at Citi right now surrounding what the president thinks he can do regarding oil prices? What can the president of the United States do?
Yeah, I'm not an oil expert by any means. Yeah, so I'm not super familiar with the plan to try to influence the price via futures. Of course, it is a very physical market, right? It's based on supply and demand. I think obviously, there's maybe limited ability, in terms of what you can do instead of actually just, pulling back. But I'm not an oil expert by any means.
Yeah, I'm sure a lot of people are scratching their heads about that one. Now, are you still looking for 75 basis points as a base case for this year of decreases, or are you sort of putting that base case on hold until we see how this war progresses?
Yeah, it certainly does depend on what we see, progressing over the next couple months. But yeah, for now, that is absolutely still our base case. We're expecting those cuts really more into the summer, maybe even fall, September or so. And that's just really based on the pattern that we've seen in the labor market data for the last couple years, where we always start the year pricing out expectations for Fed cuts. We've gotten some stronger data. But then by the summer, the labor market data is starting to weaken again, and we're starting to price those cuts back in. And then by the fall, we're getting those cuts delivered. I think we'll see that similar pattern this year where, in a very low hiring environment, you do tend to get much weaker data at the time of year when you're usually hiring a lot of people, and that's the spring and summer. So we are expecting to see that weakness in the labor market come up again in a couple months.
All right, Veronica Clark, always a pleasure to speak to you, Jobs Day. That is Veronica Clark of Citi. And don't miss our interview with National Economic Council Director Kevin Hassett and Chicago Fed President Austin Goolsbee. They're at 9:30 a.m. on Open Interest. Now to other top stories trending on the terminal this morning. President Trump is being sued by states over new tariffs after the Supreme Court loss. 24 states said in a lawsuit that Trump's proclamation imposing a 10% tax on imports is, quote, fatally flawed and must be overturned. The lawsuits set up a fresh legal fight over executive power that could take months to resolve. Liberty Media Formula One has seen $1.9 billion wiped off its market value since the Iran war began. The new F1 season begins this weekend in Melbourne, Australia, the first of 24 races in 2026. Uncertainty, though, of course, surrounds two races next month, supposed to take place in Bahrain and in Saudi Arabia. Deutsche Lufthansa is considering adding flights to Asia and Africa due to growing demand for long-haul routes in the wake of the Iran war. The war has upended passenger flows that would have been served by Middle Eastern carriers. Lufthansa looking to add flights to Singapore, India, China and South Africa. Coming up, the Trump administration considers options to tame oil prices. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in London. The Iran war in its 7th day now as the House votes down legislation to force a halt to U.S. strikes on the Islamic Republic. That as oil prices rise, with U.S. retail gasoline prices climbing to their highest since September 2022. Joining us now is Jonathan Tamari of Bloomberg Government. Jonathan, how high will the president be okay with gasoline prices going? He did already say, look, it's temporary, so don't worry about it. But at some point, he'll have to give a better answer than that, won't he?
Absolutely. I mean, remember just a week ago or last week, he was bragging in a speech to the country about how low gas prices had fallen under his watch as a sign that he was trying to take care of the economic concerns that voters are worried about. So I don't think that answer is going to last very long for him. I think it'll last even less long for Republicans in Congress who are already worried about losing their majorities in the House and Senate. So this is going to be a major issue that brings pressure onto the administration as they carry out this war.
And I did say 2022, I meant 2024 for gasoline prices. For crude oil itself, we're looking at a longer period than that, but it is basically the highest of President Trump's tenure either time, right, first or second time. Is there anything that the president can do to actually tackle so-called high crude prices, or is it such a global market there's not much he can do?
There's not a lot that he can do directly. I mean, he's trying to take, individual actions. His administration announced that they'll allow India to import oil from Russia, which counters the pressure that they had been trying to place on Russia for a long time now. That's a small move when you talk to analysts. That's kind of a relatively minor step. But people who watch this industry say that as long as the Strait of Hormuz is effectively blocked, you're going to have a worldwide pressure on oil prices, and they're going to keep rising.
The State Department also said Thursday that the US and Venezuela are resuming diplomatic ties now that Maduro is out. Does this change anything? I mean, it comes just after Doug Burgum was there, right?
Yeah, I mean, it moves in the direction that the administration had signaled for some time now, that they were going to work with the remains of the regime of Nicolas Maduro, work with Delcy Rodriguez, and that they're not going to elevate the opposition party. It had been pretty clear that that was the case, but this makes it fairly official that they are not going to elevate the opposition that most people believe won the last election in Venezuela, and they're going to be okay with the current regime. But it also illustrates a big difference between Venezuela and Iran, as we were just talking about, that in one place there was a existing infrastructure left for the president to work with, and the other there is not any longer.
Very, very different regime. Yeah, Jonathan, thank you so much. Jonathan Tamari of Bloomberg Government. So, Brent, continuing to rise, this particular move after the Financial Times reported Qatar's energy minister is warning the war with Iran will likely force Persian Gulf countries to halt energy exports. Let's get to Bloomberg's Will Kennedy now. So this chilling interview with the Financial Times coming after we heard the president was issuing a waiver so that India could buy oil. We're seeing oil dynamics change in real time, aren't we, Will?
We are, and the problem that energy traders have is that on the one hand, the longer this crisis goes on and the longer that the Strait of Hormuz remains blocked, the reverberations through the global energy system will be more and more felt and prices are likely to ratchet higher. But on the other hand, traders also have to be wary that this war could end at any time, in which case the straits open and a lot of the pressures come out of the market. So it's a very hard place to be as a trader. It's very hard to be on top of both of those dynamics. But what we got from the Qatari energy minister today was a really stark warning, as you say, that if this does carry on, the impacts on energy markets will not be counted in days, but perhaps in weeks and months, and that energy prices could keep going higher. That's where we are.
Well, and every next piece of infrastructure damage also, causes that deadline to shift back further and further, right? Will, these 11 million barrels that are at sea that India is now allowed to buy, I mean, when you think about the 18 million barrels that go through the Strait of Hormuz every day, it doesn't sound like that much. Does it bring some relief to India, and what does it do to Russia? It does bring some relief to India. India is very reliant on oil that comes out of the Strait of Hormuz, and so it was really feeling the pinch. It had been a big buyer last year of Russian oil. That had stopped to some extent because of sanctions from the US on Russian oil exports. Those have now been waived for a limited period of time, and so it will allow India to take in that Russian oil, and it will bring some relief, at least in the short term. For Russia, this whole crisis is a big boon. It had been really suffering from lower oil prices, especially for its own oil, which was trading at a very, very big discount because it was struggling to find buyers. Now India can become a buyer again. Prices are much higher. This will come as an enormous relief to Vladimir Putin and his budget and his war economy. Yeah, that discount is getting shaved off, right? It could even turn into a premium in the worst of cases. Just curious about what you think the president has in his toolbox to change the price of oil. The big thing that he has, and he hasn't done it yet, and I'm not sure it's on the cards, is the Strategic Petroleum Reserve. He can put oil from the SPR, these huge caverns that the US have, which contain many millions of barrels of oil, into the market, and that could bring down the prices. The International Energy Agency, which is a group of developed economies, they have contingency plans to release strategic reserves globally into the market. So there are these relief valves that can be pushed or opened
in the coming days and weeks. But if the strait stays closed, if those flows remain constrained, they probably won't be up to the whole task.
Yeah, it's very binary, isn't it? Will, thank you so much. You wonder what level oil prices would cause any of these relief valves to be opened up. That is Bloomberg's Will Kennedy joining us there. Turning to tech, SoftBank is looking for a record loan as much as $40 billion to finance its stake in OpenAI. Matt Bloxham of Bloomberg Intelligence joins us now with more. So it's doubling down on OpenAI, it would seem. Matt, what's SoftBank seeing?
Yeah, that's right. I mean, it's an interesting play on, kind of how to make money out of the AI future. Obviously, they've been historically a big investor in OpenAI anyway, but also in the likes of NVIDIA. But they've kind of trimmed their stakes in NVIDIA historically to kind of fund this. And you're going from a $30 billion current stake to adding another $30 billion to that, really, as you said, doubling down. So, yeah, an interesting kind of focus of their investments. I think a lot of people might think that actually owning the picks and shovels, if you like, the kind of NVIDIAs of this world might be a kind of more diverse way to play the trade. But they're clearly showing a lot of confidence in the growth runway ahead for OpenAI.
Matt, this Anthropic story, Dario Amodei now saying that he has to take it to the courts and, the Pentagon just won't play ball. What's the best case scenario outcome for Anthropic, given that they're on a list now and either which way, they're probably not going to get that $200 million Pentagon contract back?
Yeah, that's right. I mean, and, in the grand scheme of things, $200 million of revenue against an annualized run rate of $20 billion isn't a huge amount. I think what's more at stake here, for me at least, is the potential IPO that they're thinking about, and the fact that if they've got a supply chain risk designation in its own right, that's going to be a bit of a niggle for some investors and could potentially have contagion risk in terms of other, especially US companies, thinking about whether it's appropriate or not to kind of work with Anthropic or another AI provider. So I think it's really important for them, regardless of kind of future government contract opportunity, to challenge this in court and get it removed, so that they've got a cleaner story in the IPO.
All right, Matt, thank you so much. There's always so much to explore with Matt Bloxham of Bloomberg Intelligence. Coming up, payrolls report on deck. We'll get you all set up for your Friday trading session. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in London. Now a look at what's ahead today. Fed Governor Chris Waller speaks exclusively to Bloomberg's Michael McKee. That interview at 7:30 a.m. Eastern. Then we have the February jobs report out at 8:30 a.m. Eastern, along with January retail sales also out at that time. They would have been potentially big market movers if it weren't for other things that were going on. Marvell extending post-earnings gains now after the chipmaker said its year-over-year revenue growth rate will accelerate each quarter to fiscal 2027. That's a lovely gain there for Marvell Technology, up more than 11%. Then we have Omada Health up almost 14%. Earnings per share and sales beat the street estimates. Gap, though, disappointed. Old Navy in particular disappointed, having been leading the growth for Gap recently. Its brand and Athleta fell short of expectations, and that had a big impact on Gap earnings. Let's take a look at the macro environment now on yet another day of war. Crude oil has resumed its gains. It was lower earlier, but a few little items, including a Qatari energy minister interview in the FT, causing this market to revive. Brent crude is actually above $87 a barrel today. Another few basis points onto that 10-year yield. We're at 416.54. If you look at futures, they're pointed lower, as you might expect. That VIX index is creeping ever higher as well after an up day yesterday. That's it for Bloomberg Brief. Surveillance is next. Do stay with us. This is Bloomberg.